Welcome to the PlanStrongerTV market update for Wednesday, August 5th. A lot to talk about as always, so let's dive right into the numbers. You'll see those 2025 total return numbers for the indices we follow. And then we'll slide over and we'll add the year-to-date numbers and strong showing, of course, across the board. Dow almost equaling what it did last year. And again, these are raw numbers year-to-date, not annualized. On down the list, stand out to me, small caps, almost double what it did for all of last year, year-to-date. So 23% is a very strong return for any stock market index, let alone for just over half a year. And then foreign stocks not to be left too far behind. And then bonds basically flat. And again, a reminder that that is the price change, not the interest being earned. So Robert, let's dive in here. A lot of good news, or it seems like the market has become buoyant with some enthusiasm. And my question for you is, what's creating that enthusiasm? Anything in particular jump out at you that says, hey, this is some good news?
I think across the board we have so much. I think we have so much negativity in the news cycle right now with, the Iran war is dragging out and Iran is lashing out as much as it possibly can with the armaments that are remaining in its arsenal, attacking a ship here and there. But the numbers, some of them I'm going to talk about today, which are quite impressive, but really the labor market, manufacturing, just so many metrics are coming in and not giving market participants reason to be afraid. So it's nothing I think overall the economy is moving along, moving in the right direction, growing. Not only beating expectations on a lot of fronts, but crushing what the narrative is. So I don't think it's any particular thing that, hey, this is what's really driving the economy. I think it's really broad-based, and just I think investors are like, okay, here's the news cycle, here's where I scroll through, but let me look at the reality and what's going on.
So once we kind of set aside the news and whatever, information or misinformation might be shared, and you look at the actual data, you're saying that the actual underlying data is good.
Yeah, for example, a couple of weeks ago, the bonds were more in the negative, and right now they're only down, 0.04%, meaning prices have increased, meaning yields have come down a little bit. But that's not the narrative of what we hear. So, that's precisely it, David.
So, when we look at the performance year to date, I look at this and I compare it to historically, for the longest time, we've talked about equity markets, averaging 10 to 12%. And so, last year and this year, they just stand out so strongly to me. This when you set aside, as you said, some of the negativity or a lot of the negativity, you've got some real strength here. And so, I know that one of the things that we want to make sure we got to is manufacturing. Where does manufacturing fit into this enthusiasm we're seeing?
Well, those were some of the strong numbers that really caught my eye on Monday, because a lot of manufacturing data came out from the Institute of Supply Management, ISM for short. And so let me just talk about three of them really quickly. The overall report came in strong. We were expecting, now I'm going to do the 50-50. A reading above 50 means expansion, growth. Below 50, contraction, going lower. So the main manufacturing PMI, Purchasing Managers Index, we had a reading of 54 in June. It beat and went up to 55.6. So it's expanding at a greater clip, number one. Number two, employment. When I see a number below 50 go into 50, that's exciting, at least for me. In June, the manufacturing employment index was 49.7. It jumped into 52.8 in July. And that's the first time that the employment manufacturing index has been positive or above 50 since September of 2023. So that's exciting. And finally, I'm going to say that New orders were at a very healthy 56, increased even more to 56.7. New orders, very important because that means they haven't even started manufacturing. These are just orders coming in, and a greater number of orders are coming in than they expected, than manufacturers expected. So that's, that means employment, back in positive territory. They need employers to do the manufacturing. The employees. According to the manufacturing data that came out on Monday, a lot of positive news there.
I think of the ones you mentioned, Robert, the one about the new orders increasing and becoming much more positive. That definitely signals, continued demand for employees, and making stuff here. Yes, it's great to buy things cheap from overseas, but the more we make it here, the more economic impact and growth and expansion we can see, which is fantastic. And I want to go back to one of the numbers we talked about, small caps. Mm-hmm. Small caps year to date really outperforming. Is one of the reasons for that, Robert, that we didn't see the interest rate increase, and because small caps tend to be more tied or more sensitive to changes in interest rates versus larger companies?
Absolutely. Small cap companies are definitely more sensitive overall to rate increases than our larger companies. But also remember, employment is healthy, consumer demand is healthy. Just a whole host of factors that have kept small caps rising. And also the valuations, we had a lot more growth in the large caps over the years, and small caps have kind of been underwhelming. So it was really their time to kind of surge forward, and there's more to come. The valuations are, getting up there, especially for the growth sector, small cap growth. But overall, there's still room to run for small caps. And if I may, David, you had mentioned 2025 numbers and 2026 numbers, very green. I have to say that hasn't been without a ride in terms of volatility. Like almost all investors have a portion of their portfolio in like semiconductors and the NASDAQ and tech heavy. Boy, has that been a ride. I mean, we've had days of, individual stocks going down 10, 12%, and then, 2 days later going up 8, 10%. So looking at those numbers, yes, it's important to step back and look at the overall picture. But, the day-to-day can get very volatile, very messy, which is why it's so important to kind of step back, fix your allocation, and monitor it, of course, but, let your plan play out instead of trying to trade day by day. You don't want to do that.
Yeah, and I think I would add to what Robert shared about that is it's really a strong approach to take a top down and then work your way down into the details. So start with, when we're looking at your investment allocation or how aggressive or conservative you're going to be, we first start, how long is it going to be before you're going to use the money? That's number one. Number two, we start with a top-down approach. As I'm going to have, a certain percentage in stocks versus bonds, or growth versus income, or, at risk, not at risk, however you want to look at it. And then we work our way down. It isn't usually the right approach to say, well, I'm going to start with, hey, I want to buy semiconductors because they've been beaten up. Well, I mean, you can do that, and you can be successful doing that. But a lot of what we're talking about on the update is framed with the concept of our being very deliberate about working our way down and building out a portfolio that starts with the right overall allocation of how much risk, and then working our way down to get good diversification in a number of ways. Because as Robert very well said, you're going to have days when things are very volatile, and it doesn't take much for a sector to be affected by some news coming out. And I got to go back to one more thing before we wrap up that we started with, and we started with talking about about Iran and things going on there. One of the things that you don't hear about in the news, I'll say it, okay, because this is my observation, and I think it's good to keep this in mind as we think about how we invest. The U.S. government, our administration, is trying to very carefully structure a relationship and do a deal with Iran to get a resolution that maintains the integrity of the country and that we have people that we can deal with. If we wanted to turn Iran into a parking lot, we would have already done it. Okay, so this is not about our inability to wage a war or to conquer the enemy or to vanquish our foe. It's a maneuver. It is a delicate thing that is being worked on. So I think that when you look at the news, you have to keep in mind that there's a lot going on behind the scenes to try to make this work in a very good long-term way, not just squashing them, because we could have done that a long time ago. And so I wanted just to provide that background or that perspective as you look at the numbers and you hear what's happening in the markets and what we see on the news, Robert. I just think it's important for us to keep those things in mind because that's the greater backdrop. And Iran is not the only challenge around the world. There are challenges all over the place. And so, it's the nature of our society, the planet we live on. So a little perspective for the numbers and the news that come out in the media. Final thoughts, Robert?
Final thoughts? No, I think that was a good wrap up, David.
Okay, well, good wrap up. I mean, again, I don't like to get political on our updates or in anything that we do, but I think that we need to keep a perspective that there's a lot of noise, and when you lift the hood and you look underneath, you have an 8-cylinder engine or you got a little 2-cylinder. Who knows what's there? But we have to look underneath the hood. So when we look at the data, that tells us a lot, and it's best to look for real financial data and real financial information, not just the headlines. Almost always the headlines can be ignored and go deeper and find out what's really going on, even if that headline is exciting. Hey, the good thing about an exciting or provocative headline is it makes us stop and take a look, but we need to do more than that. We need to then read what has gotten our attention, and a lot of times there's a lot more to the story, and maybe it's not exactly what is in the headline. Okay, but we will continue to monitor the financial news, and we'll sift it out for you. We'll come in, we'll talk about what's happening in the markets, and we do all that to help you plan stronger.